Welcome back, guys, to another episode of the weekly reviews and outlook. Hope you're enjoying the sessions. So today I'm just going to give you a quick rundown of the pairs that we're going to be looking over. We're going to be looking over the dollar index, pound JPY, euro New Zealand dollar, Aussie dollar JPY, USD JPY, Aussie dollar USD, euro USD, and silver. Something a little bit different this week. Now, for those that want to skip to some of the other pairs, just simply go underneath the video and click the time and it will jump to it for you. And one final request, if you are enjoying these, please do drop us a like, hit subscribe and turn on notifications for when we next have our video. So what I'm going to do today, I'm going to run through these pairs for you and do the analysis live so that you can see how I'm thinking and the thought process behind it. But we're going to keep it very simple. Just looking at market structure, okay? First thing I'm going to identify on the dollar index. Remember, this is all from a technical standpoint. I do not trade fundamentals, neither do I care about them. I'm looking at this market structure. I can see the market was clearly moving up at this phase in the markets, okay? We can see this exhaustion on this phase, but this to me looks like a potential reversal. Now, what I'm noticing is the market was moving up in and around these areas here, around 97.39, okay? We're making structural lows, higher lows, and this became a very strong resistance level in the market. What you do notice here is we had this false breakout of this market structure and a break straight back in. So we know that there's very much bearish pressure here, and especially in and around these levels, we know we have sell orders, okay? Now, what I'm noticing is once we had a break of this structure, you can see the price continued to push to the upside, making a higher high of this previous structural level low to the left. But as soon as we did push up, what happened? Price started to reject this area, and we can see here we have 3 days worth of this rejection. This is an indication to me that the dollar index at the moment is potentially overextended, and we're potentially going to have some move back to the downside. Now, in order to see that evidence of this move back to the downside, what I'm going to need to see happen is price starting to break previous structure level lows. In an instance like this, we can see that this level has become a very strong area of support. However, looking at the overall structure, we have our structural high, lower high of this resistance level. Every time the bulls tried to push the market back to the upside, you can see here they failed to break, and now we've had this continuous bearish pressure to the downside. So with that being said, I think it's fairly simple to say that I'm going to be sell biased on this moving forward as of next week, which means I'm going to be ignoring buys altogether. I'm going to wait for price to pull back in around some of these strong resistance areas on this market, which is around 97.72, to potentially make a new lower high or double top of this previous lower high. And if we have this continued bearish pressure on the market, then I'm just going to look for a simple break and retest of this structure and a continuation to the downside. Now, when I'm looking at this, what I want to be focusing on is the range that I'll be looking to trade. First things first, I have my structure. I've realized that the pressure on this market is sell bias at the moment. The formation of this structure is also sell bias, indicative of these lower highs and lower lows. Now, once price breaks this structure, I need targets for price to move to. This is going to be the previous structure higher low of the previous structure low, okay? And this was the move to the upside. I'm now going to be looking a little bit further to the left to look for some areas on the market where price potentially may come to. So we have this previous resistance area, and we can go all the way back here and find resistance, but this is all I'm working with. And when I measure this dollar index from here to here, and we're looking at around 50 pips from this range to this range, okay? Pretty simple. Now, with that being said, what I'm looking for is a good risk-reward ratio if price comes back into these areas here, making sure that I have a good stop loss and a 1-to-3 risk-reward ratio back to the downside. If I don't find the 1-to-3 risk-reward ratio, then clearly I'm not going to be taking a trade on this pair. As I use this as more than as complements than anything, I'm going to want to start to see a weakness in the dollar and see this pair start to fall to the downside, affecting some of the dollar pairs and their strengths, okay? So that's the dollar index for now. The next pair that we're going to look at is pound JPY. Now, this has been very interesting structure and pretty simple to trade over the last few weeks or months, should I say. First thing I'm going to identify is where price is making its highs. We can see here that price came to these structural levels, looking to the left, not too worried about too much structure. We have 3 days worth of evidence to indicate that the bears are stepping into this market, especially with this bull run to the upside. This could be a potential exhaustion phase, so this should be a very simple selling opportunity. When we make a higher low of the previous structural low, making higher high, higher low, higher high, higher low formation, we expect this market to continue pushing up to make a new higher high. When this fails to do so and starts to show signs of rejection, and we have 5 days, 6 days worth of rejection and a continued push to the downside, it's starting to indicate to us that the bears are stepping into the market. That being said, we did identify this as a strong sell zone. We then started to identify that price started to make a lower high formation of this structural high. This is indicated here. We had this attempt to push to the downside, but we didn't collect enough volume. And when we came back to this level to make a double top of this previous lower high, we've had this continued run. Now, we were running into some sort of resistance around this area here, which looked to seem as if we were forming a range on GJ at this moment in time. We did, but we formed a higher, lower range, and then a lower high, a low range with this market structure. Eventually, price found enough momentum to shift back to the downside, indicating sell pressure. And look, we've finally broken this resistance level here. What we're now waiting for on this price action is to see price come back in and around these levels to look for a potential retest of a continuation back to the downside, especially now that we've identified the sell pressure in the market. If we have a break back into structure, a close above, a retest, then you could look for a potential continuation. That's a bit long-winded, and I think that might develop over the next 2 weeks if that's supposed to happen. So for now, my eyes will be set on continued sell bias on this market structure, back into structure for a continuation down, or a perfect retest of previous structure, which was once support, now term resistance. Other than that, I'm sell bias. Targets to the downside, I'll be looking for major levels here on the market. This is GJ, so the range on the daily from here to here is fairly big. We're looking at almost 190 pips. Only need a 1 to 3 for about 30 to 50 pips. As long as I get that range and a good risk reward ratio back to these structural levels here as potential targets, then I'll be looking for sell opportunities on GJ. The next pair I'd like to focus our attention on now is Euro New Zealand dollar. Now, this structure is very interesting, and the first things that I'm thinking in my head is sell bias. What we can see with this market structure is that price is actually making higher highs, higher lows, indicating that the bulls are in control of this structure. But what we do have to identify first and foremost is before this happened, we had an area on the market where price became a very strong resistance level. Now, this resistance level has been previously broken, retested, and we've had this potential continuation to the upside. But notice with this continuation to the upside, what's happened? When price tried to push to the upside, we've had this huge rejection. Now we need to ask ourselves when we see this, why is this happening? If we take a look to the left slightly, what you notice is we have a strong area in the market, a supply zone where price has tapped to in the past and rallied to the downside. We now have left this zone for a very long period of time and we've come back to it. And as soon as price has tapped into this level, we have this huge rejection. Based on that information, if I'm looking at this structure as a buyer bias market and looking at this as a resistance level, previous higher high, higher low, we've had the break and retest of this structure, then technically this candle should have closed bullish, making a new higher high. We failed to close bullish and had this huge rejection. Now, to me, personally, I'm looking for sells. I'll clear my charts and I look at this structure like this. I'm not going to be forced into any buys in and around any of these levels anytime soon. For clear buys, I'm waiting for a break of structure, retest, continuation back to the upside. It's as simple as that. For sell bias now, I'm waiting for price to come back into these levels to show evidence of bearish pressure and a continuation to the downside. If this doesn't happen next week, then I'm not going to worry. I'll put Euro New Zealand dollar on a back burner and I'll come back to look at it at another time. The next thing I'm looking for is for continued bearish pressure on this market to then create a lower high formation before a continuation to the downside. Again, patience is a virtue on this pair, but to me, it's clear that this is sell bias. Unless I get the evidence, I will not be buying into this market. And if I do get the evidence, I will be waiting for sells. And that's Euro New Zealand dollar. The next pair I'd like to focus our attention on is Aussie JPY. Now, this looks like a very messy pair at the moment, but what I have to do is because I need to build a case as to what I'm looking for. It's easy to say that we have a structural high, lower, low formation happening, but we need to make this clearer. What we can see in the previous history is that price was forming a strong resistance in and around these levels here. Price was then forming a very strong resistance support level in and around here. Now, if we account for the bodies and wicks, which is completely fine because I'm not looking at this structure as a singular line, I'm looking at this structure as an area in the market, price started to range. We had this pop to the upside, which would have probably induced breakout traders, hence the reason why I don't advocate trading breakouts, and potential retest traders into this market once price gains back to this support. What we see is the breakout indicating bullish pressure off of this distribution phase in the market. We then had this continued rally back into structure, forming a lower high of this range. And then we had this continued push to the downside. Now, what happened last week when the markets opened, or this week, last week when the markets opened, is we had this huge gap to the downside, indicating that the sell pressure was still in the market, which is understandable. After the gap down, we had an attempt by the bulls to close this gap, which usually happens. They filled it, but they still got rejected by the bears, closing below what was once a previous strong support, now turned resistance. We can see that the bears are in control of this market at the moment. I'm sell biased on Aussie JPY. I'll now look to the left for targets on this market to see where price potential will come to. Looking around 75.40, that's where I expect price to come to if the bears are going to continue this rally to the downside. I will not be tricked into buys, and the only time I'll be looking for buys if price starts to show evidence of a break, close above 77.48, potential retest, high-low structure, continuation back to the upside. If this doesn't happen, then all I'm going to be looking for is for sell bias opportunities to look to continue selling this range back to the downside. First thing that I want to note is how big is my range from where resistance and support is, and it's about 204 pips. I'm looking for a 1 to 3 risk reward ratio for around 30 to 50 pips. And if I get the good risk reward ratio, then I'll be looking to continue to sell this pair back to the downside. And that's Aussie JPY. The next pair I'd like to focus my attention on is USD JPY. Now, this pair has been performing pretty well over the last month or so. We had a phase in the market where price was just moving sideways and creating what we would call a distribution phase in the market. After a rally to the upside, the banks caused some confusion, enticed a lot of buyers and sellers into the market, causing some real fatal breakouts, false breakouts of structures, and then a break back into structure. Probably a very big stop hunt, to be honest with you, looking at the lower time frames. We're not going to go into too much details about that, but we have it. And now what we see is the market is now continuing to push to the downside. We can see over the last week, we had the gap of this structure with no fill, indicating very strong bearish pressure in the market. And the structure that I'll be focusing my attention on was in and around these levels here. We had this range in the market where we had this false breakout to the downside, as I said, entices sellers into the market. We had this break back in, again, a break to the upside, enticing buyers back into the market. We've had this corrective move back into structure and this continued bearish pressure back to the downside. We're now closing below previous structure levels, okay, but we have to be mindful now that we're sitting at a very strong support zone. What we want to see for UJ is a potential retracement on this pair back to the upside, closing in and below the previous structural resistance, making a new higher low formation for this continual bearish move back to the downside. If this price starts to reject and hold at these support levels around 109.72, starts to push back to the upside, creating higher low formations, then we potentially are going to have a range that becomes bigger from the previous small range to a larger range, which is resistance, support, potential resistance. This becomes another distribution phase in the market where the banks are pulling in buyers and sellers before they decide to rally this market to the upside. Bear in mind that the dollar index looks to seems to be bearish at the moment, potentially indicating a higher low formation continuation to the downside and continuing this short rally on the dollar yen pair. We'll see what happens. Will I be buying this market? Absolutely not with this much sell pressure. If the structure changed to a buy structure, then I'll potentially be looking to buy. But for now, I'm sell biased, and I'll be waiting for the evidence of this pair moving forward. Next pair I'd like to focus my attention on is Aussie USD. Now, this looks like a very messy structure at the moment, but we could break it down into a very simple format. The first things I want to be noticing right now is previous structure, just to see what's been happening in the behavioral patterns. Looking to the left slightly, we can see that there was a major area of resistance in the market where price made a structural lower low of the previous structural high, lower low, lower low. We've now had this strong rally back to the upside, and you can see that this move to the upside was fairly small, where a lot of confusion in the market, lots of rejections from the upside and downside, indicating that there was no real overall bias at this moment in time. We finally had the pop to the upside, which you can imagine now, if we start to draw our structure like this was inducing buyers and sellers into the market at this moment in time, okay? Once we had this break to the upside, imagine how many buyers entered the markets. And then as soon as price came to these levels here and started to break, how many breakout traders entered the market? Immediately we see the signs of rejection based on previous market structure history, and we've had this continued rally to the downside. With this structure, what we can see now is a structural lower high of this formation. We have a previous level on the market where price rejected and found support, so we had the bullish pressure. If there was enough buy orders in this area, then technically we should have a push to the upside, higher low structure and continuation, but we haven't. We've had this push back to this level, a gap down, an attempt by the bulls to push back into structure with a huge rejection, a bearish close, a bullish pressure indication in the market, and sell pressure indication in the market. At this moment in time, structure is not clear. What we have to do in an instance like this is remove our support resistance zones and our structural levels, and we need to identify what's happening. We have this resistance level by the bears and the support zone by the bulls. This is indicating to us that the market is in an accumulation phase, which means it's winding up to either pop to the upside or pop to the downside. That being said, what I'm waiting to see on this market structure is a clear break of this structure, a lower high formation indicating bearish pressure and a continuation to the downside, or for buy pressure, I'm looking for the pop to the upside, a high low formation, and then a continuation to the upside. Simple price action, took past history to help build enough evidence and a case as to what we're looking for on this structure. Anytime I see wicks to the upside and to the downside, especially with a gap down, a gap fill, rejection from the bears, rejection from the bulls, we wind up in a accumulation or distribution phase in the market where orders are being placed before we have a continued rally to the downside or a potential rally to the upside. So we'll see what happens with Aussie dollar moving forward next week. The next pair I'd like to focus my attention on is Euro USD. Now we can see with this structure we have a little bit of work here to do because it's not clear. We could draw our support and resistance and just go from there, but I don't think it's going to help anybody in terms of understanding the bias. So we'll break it down. We had a previous resistance level here on the market indicating that price was failing to break above for a period of 4 days. Price rallied off this level and came back to it. We had this false breakout of this structure, again probably inducing breakout traders into the market, and if we drop to the lower time frames, probably retest traders also. That's why we take our analysis from higher time frame charts, because we don't want to be trapped into these trades. So what happens now? Price breaks up, rejects, attempts to push back up, fails and breaks below what was once previous resistance, and now potentially became a resistance level depending on how you've drawn it. That's not important to me. What I want to try and find out is who is in control of this market at the moment. We had this continued push to the downside, and then we got to a level on the market where price failed to break, became a support zone, previous market structure, and rallied to the upside. We then came back to a retest area on the market, which is very clear here, making a structural high, low of this current formation. We had this double top of this previous lower high, continued rally back to the downside, making a lower low, and now what we see on the market structure is clear evidence on in and around these areas here of a structural high, low, lower high, lower low, lower high, potential double top, push to the downside. We then had an area on the market where price created its low, failed to complete the range, or however you want to draw it, not too fast, failed to complete the range, and now we've had this attempt again back to the upside. Notice with these candles here, we are closing above previous structure, which is indicating to us, body-wise, okay, this is indicating to us that the bulls are in the market, and at the moment, they're not letting go of this bull pressure. So we know the overall psychology behind this is bulls are still trying to push this market up. So for buy opportunities, it's clear. We are waiting for a clean break of this structure to show evidence the bulls are in control, using this as our range back to the upside. If we're looking for 30 to 50 pips, we will need that in this instance, seeing as we're almost out of 1 to 3, is looking for a good small tight stop loss so we can fill the range. If not, we hold tight and see what happens. The management of this is different. You can enter because we're expecting a higher high of this previous structure, so we can always manage it, but I'm not going into management. The next thing I'll be looking at is how this level holds next week around 1256 as a strong resistance level on this market. We've already tapped into it a few times and we've rejected it. Now clearly there is still bull pressure in this market with the close above previous structure and this continued attempt to push to the upside. So what I want to see is a strong push back into this level, a rejection of this level, a retest of this level, and then a strong rally back to the downside. The overall consensus of this market will then introduce buyers and sellers into the market. But remember, because we're waiting patiently, we're waiting for the break retest continuation for the buy, we will not be buying. We'll be looking for the evidence of the false breakouts and then continued rally back to the downside. Let's see how this pair plays out as of next week. The final pair I would like to look at is silver. And as I said, this is something new. But I'm going to start looking at this pair because what I've started to notice, when this pair rallies and starts to trend, it really does trend beautifully. A lot of the time, this pair is just sitting in around levels, consolidating, moving sideways, rejecting from highs and lows. But when it does move, it moves, okay? So based on that information, I'm going to be focusing on technicals only. I'm going to be looking at the market structure with structural highs, lower highs, potential lower highs, and then I'm looking to the structural lows for where price can potentially break to then make a new lower low of this formation. Silver's overall bias is down based on structure. I'm looking for this range to be completed back to the downside at around 1460 or a potential pullback in and around these levels for a retest and continuation. I won't be tricked into buys because for buys I'm looking for a clear break, retest this structure and a continuation to the upside. And if my range from where price is at now back down to support does not fulfill my 1 to 3 risk reward ratio, I'll be waiting for a clean break of structure lows, retest and continuation. Pretty simple price action, and this is what I'll be looking for next week. The evidence shows clear signs that this area of the market is a strong resistance zone because we've had 3 days worth of rejection. And one thing to point out is we have a huge bullish candle here bouncing off of these structural lows. We had 3 days of rejection at these levels here, a break below previous structure level lows making a lower low, but bulls came in indicating that they are in control of this market on this day. But unfortunately, once this candle closed, the bears said, no thank you, I'm taking back control of this market and we'll be looking at this structure, wherever you want to draw it, I don't really care, back to the downside of price making a retest, push lower low, retest, hopefully a push back to the downside. So we'll see how this market structure plays out next week. It'll be very interesting, and I'm very much looking forward to trading silver to see how this plays out. I hope you've enjoyed the episode. For any requests that you have, please leave it down in the comments, and hope you guys have a great trading week. Take care for now.